from the political perspective, what are some of the other key points that you think
well,
characterize?
I think as we move forward, again the three.
What would be the New Deal of today?
Well, we're going to have to reform, re-regulate, and restructure the financial system, and you start that by changing the management of the leading institutions, but also in order to get a clean audit and cooperation with public purpose, which you are not going to get so long as the existing teams are in place. The second point is that I think we should be very distinctively in favor of policies that promote extension of social insurance. That, of course, in the United States, there's a health care issue that has to be dealt with, but in the broader world, there's a question of restoring the public basis of the basic security, economic security of the population. And the third point I would make is that we need to have not just a short-term, but a long-term agenda recognizing that investment is to reconstruct the society, not to restore. We're not going back to the what was considered normal in the 1990s and in the 2000s, and we shouldn't want to.
Thank you very much, Jamie. Yep. We'll let Jamie go because he has to go to the testify. Thank you very much.
I was pretty disturbed by the zero fiscal.
Following on Jamie's item about regulating the financial markets, it seems to me that the question should be that Joe, you raised earlier is what should be how the financial institutions will look like. Is it really the small and medium-sized banks or the banks, the money center banks that we have now? It used to be that the financial system was really for the capital development of an economy. It seems to me that now we have a financial system that really does not do that, but something else, which is just creating unproductive labor. So is it really then to look at the structure of the financial banks and other types of institutions that really promote the productive activity of an economy, and not only for the U.S. clearly, but for the world around? So the issue of microfinance perhaps should be in the agenda, because in some cases this has worked quite well, not everywhere, but significantly.
Thanks, Joe. Gary Dinsky from the University of California. I want to make 3 quick points. One following up on Dimitri's point. This crisis poses for us the question of what is a bank and what should be insured. Just a couple of examples of some things that seem pretty outrageous. The kind of hurly-burly way in which investment banks and large financial conglomerates were deemed bank holding companies so as to be under the protection of the FDIC was rather outrageous. In addition, the patterns of who gets the money is rather outrageous. And the fact that the TALF, for example, is structured in such a way that they're attempting to keep consumer lending going through securitization apparatus rather than supporting banks, the local community banks, many of whom are now struggling as this depression deepens and hits local levels. This is also a source of maybe outrage. I want to make a second point about the New Deal and thinking globally, but also with respect to California experience. As you know, we've had an endorsement of climate change with our Governor Schwarzenegger for several years now. And actually what we are coming to realize in California is that we have to make this agenda local. We have to get every city and town and county to embrace the need to think about the way in which it structures its housing, to embrace the need for solar roofs, et cetera. And to do this, we're going to have to think hard about incentive mechanisms and ways in which we can get every mayor and county commissioner on board. And this will be an employment agenda in part. And so it's important to move past cap and trade and just thinking about ways of rigging markets and toward basically the green economy as a source of employment. The other thing the third thing I want to say is regarding housing. It's important to keep in mind that at the root of the housing crisis is a kind of intertwined social and I guess, human crisis. John, you talked about the rage that we're seeing about people who are in houses that are too rich. And this also touches on a component that's quite ugly in our society, which is the rage about the CRA and the fact that we've got a racial divide that is now being blamed for this lending, when actually the truth of the matter is that it was precisely the socially excluded communities in which these subprime loans and predatory lending was invented in the first place. So that really has to be addressed, and the way forward, I think, is to break the link between the insecurity that people have and their hope that they can try to get their own piece of the pie, given their despair that the state will no longer provide that, and what the home means. And so this kind of limited response isn't going to do anything. Actually, the way that the Obama administration has set up the program right now with the 5% limit actually ensures that the entire Central Valley in California and the entire Inland Empire will not be touched. There's almost not a home
Can you
there.
explain that 5% limit on what and what? Okay.
Basically,
Because not everybody understands.
And also what the Inland Empire is. People won't know outside of California.
okay, the Inland Empire basically
We love Riverside.
and San
Right,
Bernardino
we love
County.
Riverside, but people won't know what Riverside.
Places in which essentially the housing bubble really emerged, and prices now are something like 40–60% below what they were. But the rules of the Obama administration's plan state that there can be only a division of, or a difference of 5% between the market value of the home and the value of the mortgage. We're out of that game. There's not a place in California that mechanism will help, even given all that was said about hoping that the market's going to turn it around in the short term. So we've got a real problem there. And I would just say that shelter is, I want to just conclude by saying shelter is a global problem. It's one reason that we've gotten into this fix is the fact that we turned away so thoroughly from low-income housing located to sources of employment. Those people living in Riverside and San Bernardino and in Fresno and in San Joaquin Valley are working far, far from home. That's one of the big problems. So
With a great carbon footprint consequence.
Yeah, a renewed commitment to lower income rental housing is fundamental. And this problem of shelter is global as well. That too is an employment agenda. Housing in this country is built largely by immigrants. We got to deal with that, but also the fact that throughout the world we have unsheltered and inadequately sheltered people, many living in favelas and slums and other places. Yeah. And this is something that really needs to be addressed for basically basic human right of living decently, and also because the growth of the informalized communities outside of the orbit of formal government services is threatening the legitimacy of governance across the globe.
Cheryl Swiniger with the New America Foundation. Jeff, you may want to follow up on your Lehman theory by asking why they decided not just to let Lehman fail, but to shut down the operations nearly immediately, which is really what caused the crisis. They didn't need. You can have an institution fail and guarantee and continue the operations, but why? I mean, it's the most juvenile thing to have done, and Geithner should have been really called to task for that, because it really did cause the seriousness of the global reaction to the Lehman.
Geithner or Paulson?
Well, in this case, Geithner, because he was the head of the New York Fed who was handling the. I was very impressed, Joe, with your initial statement of themes, and one of the most important, I think, in addition to the first and second, was the third, which was the huge unmet needs, in contrast to the massive underutilized resources, a statement of where we are globally, and particularly even before, but in light of the crisis. However, I think there may be two areas of exception to that should be also a focus of concern. because I think they're a focus of potential job creation and recovery. And that is, and may become a drag on the recovery at some point, and that is energy and agriculture. Now, even though there was speculation prior to the bubble bursting into those areas, there was the very serious concern about food and energy inflation and its impact on developing economies and on the working and poor within the developed economies. I think it's therefore important that we, during this crisis, think of sectoral policies that will help expand employment and production in both the energy and agricultural sectors during this period as part of the reconstruction, in order for Richard Parker mentioned quite appropriately with the great underutilized production capacity and global wage levels, there's not really the risk of inflation that many on Wall Street are already beginning to prepare the pill to snuff out is unwarranted. Nonetheless, there is a concern about sectoral constraints within energy and agriculture and food that actually disproportionately impact the poor and working populations. And I think we ought to have, I know everyone's enamored with the green energy agenda and the green investment agenda, but I do think we have to give much more seriousness to how you create more efficiencies to reduce that constraint, but also encourage the expansion of agricultural and other energy production during this period. The second issue I wanted to mention, and picking up on Jeff Madrick's point, is that I think we need to, and partly for political optics, give as much or more emphasis on job creation, jobs and wages, as we do to strengthen social insurance. And partly this is because I think the big problem of the Obama stimulus is going to be, and I think Katrina's running a major piece in the issue coming out, this issue by Leo Hendry, is what we're calling the job creation deficit. That the lag in employment, the restructuring, particularly in the U.S., but I think this, as the ILO has warned, this is going to be the true global crisis. And I think you get a much broader public response to measures to dramatically create jobs and increase job creation than you do in pushing on the social insurance issues, although I wouldn't oppose those, but I just think as a political optics, it's important to stress job creation and unemployment. And in that sense also, I think this relates to how we frame the green agenda, which is I think that we have to move temporarily away from emphasizing cap and trade and emphasizing green investment and green production, meaning there's many ways that we can advance energy efficiency and the development of new clean energy industries that are job creating and that are pro-cyclical or counter-cyclical in terms of recovery, as opposed to prematurely imposing huge cost on working people through taxes on energy. And even some of the rebates won't be adequate to cover that additional $500 to $1,000 cost that many people will feel out in working America.
Okay.
Well, first of all,
Introduce yourself too.
I'm Joachim Palme from Sweden. First of all, I want to say that I'm very stimulated by the background papers and today's discussion. on these critical issues of this era. I think it's striking that we see the importance of theoretical paradigms. That in order to be able to promote change, we really need to have consistent theories that can guide politics. But then there are certain political blockages which means that we won't get a universal support for changes that are theoretically well-founded. And I think that it's clear that despite all the rumors of sort of end of politics, that even when we look at the past 2 decades and the cutbacks in social insurance, it's clear that it's had a party political driver, not so much the public deficits. Yet I think that even in countries with elaborate social insurance systems now, the rise in deficits will really put a strong pressure on cutbacks, and I think that we really need to go back to the Keynesian thinking here in order to be able to defend them not only on their sort of social justice qualities, but also in terms of promoting macroeconomic stability. I would like to emphasize another thing, though. We have talked a lot about an investment approach to the current crisis, and you've mentioned a lot of things associated with investment in physical capital for public use, but I would like to emphasize the potential of a social investment strategy of focusing on the human capital formation in broad terms, because I think it carries both growth potential, but it enables us also to get a socially justifiable and long-term view on public spending. And I think that it's clear that the importance of early childhood education is important, not only when it comes to learning later in life, but also in terms of possibilities of getting starting life start of more equal standing for different social groups. I think that the secondary education is underestimated in terms of promoting growth and productivity. And I think that lifelong learning and the way that public and private can create partnership, also in these times when we have ability to encourage firms to engage in investing in their labor force as one way of motivating labor hoarding. I think that we should also look at human capital formation when it comes to family formation, that the insecurity associated with family formation is putting a very strong pressure on young people especially in the most developed countries. But as birth rates fall in large parts of the world, I think we need to take that aspect serious, and it has a social justice dimension as well. Because it appears that some of the lower income people who are facing greatest insecurities are not having the number of babies they want to. Lastly, I want to pick up on another issue that Joe has raised and others have discussed, and which is linked to the developing world and the importance of developing insurance institutions for the poorest part of the world. Microfinance, microinsurance, but why not? Yes. Why not cash benefits? We have a huge commitment to Africa and to and very vague ideas of how to promote development and a development that is socially justifiable. So I would strongly encourage us to to discuss that more. And I think it's the Socialist International has a critical role here, in the sense that it has another potential of engaging in dialogue with countries from all regions on issues that we need to address, but that are very critical for their future, and where they need to be stakeholders in order to put up efficient instruments.
Yes.
Thank you.
Well said.
Oh,
Polemar, I don't know, does this work?
It's on.
It's on, okay. Mr. Polemar Haki from University of Warwick. I just want to say a couple of small things. First of all, there's something very good about this, the way this discussion is going. I was afraid that such a group would often be accused of being good on the big questions, but not good on the nitty-gritty of specific proposals. So I think the discussion has taken a very good turn, and we are coming up with specific issues that can be raised and brought up. So that's one issue. The second concerns regulation. John mentioned leverage management by the Fed. And there is a more general point that was made. I don't know if you've seen the Turner report that just came out for the reorganization of the new rules for the Financial Service Authority in England. It's a very of the UK, yes. Sorry, it's a very thorough report, but it makes a very interesting point that has been sort of touched upon in the discussion here, which is the fact that the microeconomics of regulation, transparency rules, reporting rules, and the like, cannot be dissociated from the macroeconomic environment. That you cannot have rules that apply independently of where you find yourself in the cycle. And that's something that should be, I think, requires further work and further thought, but it's something that we should take up and look into. And this brings us, of course, to the question that we discussed briefly last night. We are talking about regulation, and the issue that's related to it is the mandates of central banks. They do play a role in regulation, because at least part of the regulation is done by the, not in this country where the SEC is not part of the Federal Reserve, but there are other countries where part of the regulatory task is assigned to central bankers. And it touches on a broader issue, which is the purely monetary price stability mandate that central banks like the ECB have. Yeah. And that's something that we may want to question and propose alternatives. It is not true for the Federal Reserve, but it is true for the ECB, am I right? That it has a very restricted mandate. Yes, and I'm not sure that this is something that we should live with. So the macroeconomics of regulation and the mandate of the central banks.
Oh, okay.
Okay, I'm Luca Cazzelli. Let me add 3 points, because I think since this is a political debate, I think we should focus a little bit more, where do we really differ? Where are we different? And I would say 3 points. First, on how to recover. Recovering, for us, I would add one, that we are giving an importance to job creation and the provision of decent incomes. Secondly, that redistributing income to those who spend is actually a very important instrument for recovery. And third, which we have not mentioned, expanding what you said, Joe, to global aggregate demand by ensuring that developing countries are not left behind. It's not only the protectionist measures that you said, but it is immigrant remittances are falling right now by 15 billion. You have aid flows falling. You have FDI, foreign direct investment, being curtailed, and you have exports plummeting and the terms of trade deterioration. So developing countries right now are on all fronts going to bear the brunt. Poverty will increase, and we will run in 5 years' time or 10 years' time trying to to recover by, again, through aid transfers and so on. So and that's why it's extremely important that they are included in the debate of restructuring and recovering the economy. And I think this should be a major point for the Socialist International, that the problem with the G20 as it stands is that it has only emerging countries, and only a few of the emerging countries. At least, to be realistic, we should expand regional representation, having the representative of the African Union there, the representative from the Asian Bank there, the representative from Latin America, from the Indian Pact, etc., because we will have, you cannot recover by leaving even a 20% of all the actors out. So I think on the recovery, the main thing is to expand global aggregate demand by putting developing countries, to focus on job creation and provision of decent incomes. And I would add there as a third point, the investments in high return activities being energy saving and human capital accumulation that Joachim mentioned. Second point, on the re-regulation issue. There have been many ideas floating, but I would put on the agenda, again, the creation of a WFO, of the World Financial Organization. And I think it's very, right now, the progressive forces should put it up. This was something that we pushed it through ECOSOC in 1999. We have the report where immediately after the Asian financial crisis, we argued that the segmentation of all the institutional framework is such that you would have recurrent financial crises as it stands. And we asked for streamlined agencies that would do three things, that would provide overall guidance in the development and monitoring of international standards and codes of conduct for private financial management and capital flows, that would identify new needs for supervision of private capital markets, and that would curb destructive competition and inconsistency in national regulatory frameworks. And I think this ties very well with Larosiere's recent a report in Europe where he comes out and he's arguing for a European system of financial supervision. And basically, I think our argument should be that, look, markets are unified, they're not segmented. You cannot talk just about a European system of financial supervision. We need some kind of, there is a gap, an institutional gap, and that's where the WFO idea comes forward. And last point, that we really need to, and that will be our difference, to talk about global governance reform, take the occasion, saying that, look, this financial crisis is basically a very good example where you have systemic global risk that needs to be managed. Systemic global risk management has to manage financial instability and fragility worldwide. It also has to manage climate change, communicable diseases, and securities. This was the Zedillo report of 3 years ago, which was extremely important, about global public bads. Global public bads need global responses. And so we need a leadership, and we really need to focus on a new global governance reform agenda. And in the global governance reform agenda, I think we should call for a meeting to discuss it. There is a very good report by Joachim Lin about the Brookings Institution and Colin Bradford on gaps in institutions that I think we should pick it up and kind of further the agenda, saying that, look, this is the occasion to open this discussion seriously. I have specific ideas in mind, which we have worked over the last 4 years, but that's something that maybe we should call, let's say, for a conversion of the G20 to an L20 or L25, which is a leadership. You need a steering committee. You need a global steering committee where you don't have G20 was set up by finance ministers alone. And that's why only finance ministers attend. You need a leadership, a global steering committee with regional representation that would
That's
tackle.
what Davos was for.
Okay.
Right?
And in there, let us see the actual gaps in the institution and the reform of the IMF, which, in my view, should look after macroprudential regulation as opposed to micro and regulation. Thank you.
Can I say a quick?
Very good,
I'm
very
s-
good.